American Express just posted record revenue. Today we're going to look at what's driving this, some potential red flags, how it might inform on updates to their cards, and strategies if you don't like what you're seeing in the crystal ball. Big favor before we dive into everything is to give this a thumbs up to help with the algorithm. If you know someone that might benefit, then share this with them. Let's start with the numbers. They're pretty impressive. For the most part, top line numbers are up compared to the same time last year. The one risk factor being the net income number, but even then, it's not the scariest. This was driven by record spending by card members, strong signups for premium cards, and also good underwriting on their part, so strong credit performance. Interestingly, it might be less about all their users, but more the wealthy ones. And in fact, this offers a useful snapshot. For this quarter, total spending on Amex cards jumped by 7%, and this is building on the 6% increase last year. The one sector that has stalled is travel, and especially airline spending. Even then though, it's probably not what you're expecting. Domestic economy is the weak point, but premium cabins, so think first and business, are actually up 10%. Pretty much the same idea for hotels, so hotel bookings of $5,000 or more are up 9%. And to be fair, this tracks with their thesis that it's not about the whole, it's about the super users. Another consideration is that airline prices have actually dropped from last year. So even though normal people might be traveling about the same, the cost is now cheaper. One insight from all of this though is that we might not be their target audience and the ones making the money. In that sense, we might not matter to their bottom line. You could even argue that we're either break-even customers or unprofitable. Their focus right now might not be who you think. Millennial spending grew by 10%, while Gen Z spending grew by an astonishing 40%, but starting from a smaller base. This does mark a bit of a shift to their focus, so it's not necessarily older people, but more wealthy and younger and upward mobile. Okay, so are you telling me that all these people are spending a ton on travel? It kind of makes sense if you think about social media. Just because we're using points doesn't mean that the majority of other people are. For American Express's target audience of high earners, they might be spending $5K to $100K per year on premium travel. In fact, even last summer, high-end hotels are seeing faster revenue growth compared to mid-range and budget. Also, even looking at comments from the Sebi Funk Travel channel, it feels like there's a fair share of people that are just paying cash, paying out of pocket for these stays, and happy to drop $5K to $25K a trip. The credit card optimizer bubble is different from the travel bubble, even though there is kind of a connection point if you want it. But yeah, I think there's a lot of big spenders who like to travel, who have the cards for the features and protections, but at the same time, they don't care about points and finding availability. You see this in tech and finance. People have the cards because they know they need to have the card, but they don't want to do the other legwork. With all of this, there seems to be pretty decent buy-in, so yes, card revenue is up and doubled since 2019, but even with all these changes with their partner cards and with recent refreshes, the retention rate's still pretty strong at 98%. Defaults also don't seem to be a big factor. They scored really well for the capital stress test and actually had the lowest projected credit card loss rate and highest projected return on assets rate. Bad debts are also down. The write-off rate is at 2% compared to 2.1% from last year. Again, a bit surprising, but the younger cohort seems to be pretty reliable. Millennial and Gen Z customers aren't just better than industry averages for those specific age groups, but 40% better than industry averages for even older age groups. It's less about age and more about upward mobility and probably income. All of these factors, plus the new Coinbase One card on the Amex network, along with the potential refresh that's coming this fall, means that there's still growth. Lots of positives, but there's still risk. One of the big concerns is how much is going to be spent on the rewards program with the new launches. They're paying for the card members up front with the intro bonuses, and they need to get value in the long term, and that takes time. Kind of similar to us with cards. Another potential issue is whether they're nearing a logo maximum. So the idea that additional growth might be harder and tougher and cost more, especially because competitors are copying their playbook and trying to catch up. All of this actually led to their shares falling in the short term post-earnings. Zooming out though and looking at the 1 year, it's still pretty good. Amex is up over 23% compared to 13% with SPY. So pretty much twice as good as the market broadly. Compared to the banking ETF, which is only at 10% compared to 23%, so more than twice as much. Same thing if you compare to regional banks, which is also at about 10%. The only comparable one that's about the same is the finance sector broadly. And for this one, you're including insurance, capital markets, and also consumer finance. If you are looking for new brokerage and a new bonus, you can check out some elevated ones at asksabi.com/investing. Back to American Express, a big concern people have is that in order to keep the revenue growth, they're going to have to squeeze value elsewhere. The big levers being annual fees and also cost of credits. It actually puts a lot of people in a weird spot. So for example, let's say the card right now for you makes sense, but you don't know if the updated card is going to, and you're concerned that it's not. especially if you think they're going to be super aggressive with credits. In that case, it might make sense to get the card now to lock in the intro bonus at the lower annual fee. The counterpoint is that the intro bonus might increase, but yeah, big question mark with how the card is designed economically and also the minimum spend. If you want to run the numbers, we do have a calculator on the site that should pop up if you Google Amex Platinum worth it, ask Sebi. But yeah, lets you adjust things like credits and how you value the points for your situation and how you value things. If and only if the card makes sense, then I'd look into card match for elevated offers. I'll link to that down below or search card match ask Sebi, but that's how a lot of people are pulling better offers. On that note, if you are someone that wants to learn about cards and you want to support the channel, we have links on the website, asksebi.com, and also down below in the description box. Make sure the links are competitive, but otherwise, it is a huge way to support the channel, so thank you in advance. With all of that said, let's look at some predictions for the refreshed Platinum card. Your American Express, your goal is to increase top-line revenue without destroying the business and risking it. Given this, even though they can increase the bottom line by devaluing points, I don't think it makes sense. You risk the entire business, and it's not worth it. Underwriting seems to be under control since it's already best in class, and it's like squeezing blood from a stone. Given this, I think there's 3 things they can focus on. First one's annual fees, number 2 is cost of credits, and thirdly is spend. Annual fee feels guaranteed at this point, the question is how much. In order to one-up their competitors and also stay within a reasonable range, I think they're looking at between $800 and $999. I don't think they'll push past 1K because the moment you do that, the psychology of expectations kind of changes and it goes from a 3-figure card to a 4-figure one. A good baseline starting point is inflation. So the last increase was $695 in July of 2021. Adjusting for inflation, that's $827 today. Amex does have some cards ending in 25, so that's not off the table. So for example, 825, 850, 875, or 895. Of these numbers, I'm guessing 875. 895 doesn't look or sound friendly, but curious what you think. Number 2, and the most interesting lever, is cost of credits. Within this one, they kind of have 3 archetypes of credits. First one is one that's relatively no cost, so it doesn't hurt them. Number 2 is low cost, but very popular. And number 3 is potentially face value, but drives other revenue. So for example, I wouldn't be surprised if the Walmart Plus credit was no cost. The rationale being that it's marketing, Walmart gets their product in customers' hands, and people to actually sign up and use it, and it's more efficient than just telling people to try it. Given this, I think we will see other products that are struggling a bit tap Amex for help. It either has to be a super big company like Walmart or one that has cachet like Equinox. One I'm kind of hoping for, but probably wishful thinking, is Whoop. I am biased because I have a Whoop, but that would be kind of one that is very niche, but would make sense still. For low cost and popular, I think Uber would be the best example right now from the current credits. Airbnb seems like the most obvious connection point, and the one I'm kind of surprised that their competitors didn't really tap. There is a big question of whether it's competitive to hotel bookings, which is kind of the bread and butter though, so maybe that doesn't work. If they do end up doing it, I would expect it to be not the standard bookings, but going to be luxe and the premium stuff. Alternatively, it could also be their experience side of things, since Airbnb wants to grow this, but it wouldn't really affect and be competitive with hotels. Maybe it's my circles, but I do feel like health is becoming a very big focus. If Amex is trying to be the full lifestyle card with gym, entertainment, dining, I feel like medical is that next step. With that, one medical is available in 50 states, and they could probably toss in a credit there, and people wouldn't be not happy. So these do feel pretty random, and they kind of are, but the current strategy that they're using and also the competitors are using is to have a ton of credits, to have an annual fee like this, and then to have you kind of pick your spots to get close to that annual fee. The intent isn't for you to use all the credits, even if you can, and that's great if you can. It's to get to a reasonable annual fee for an effective number that makes sense. If you can't use any though, then the card doesn't make sense. I feel like for optimizers, it's always a bit weird because we feel the need to use everything, but that's almost not the meta anymore. But yeah, the strategy has worked for them and other people are copying it. I can't imagine them deviating now. In terms of credits that cost a face value but make money back, I think FHR is the best example. So they are paying that cost. It's not a free credit by any means, but the idea is that you discover their platform and you keep booking with it. With hotel bookings, they might be making 10% to 30% back, so it is a very profitable thing. If you only make one booking, fine, whatever, but if you make multiple, then you start to recoup value. Pretty much exactly the same idea of what Walmart's doing, but internally, they're giving you a credit to try something to get it in your hands. For them, if you don't use it, great, doesn't cost them anything. If you use it once, not ideal, but if you use it many times, that's also great. Normal people discover it and end up loving it, and keep using it for the perks. In terms of new credits, the most obvious one is Resy. Resy's the restaurant booking platform, and they acquired this back in 2019 and have been slowly integrating it with their other cards, like the Gold card and the Delta ones. The Resy platform has also been their secret weapon, and is both profitable and also helps with long-term growth for their cards. The more the platform grows, the more restaurants join it, the more lock-in and buy-in they have for their cards. The long-term goal being that if they have all the good restaurants, then you kind of have to have one of their cards. The only reason I see Amex not adding a Resy credit would be if they made a separate new Talk credit instead, since they also acquired Talk. It depends on your city, but for San Francisco, Talk has a lot of the goated S-tier restaurants like Lazy Bear, Mr. Juice, and Atelier Cran. I could easily see Amex doing, let's say, up to 300 annually and up to 150 semi-annually. For example, Lazy Bear is one of our favorite anniversary picks, so I wouldn't mind a Talk credit. Maybe a bit out there, but I also see them doubling up on the FHR credit. So for example, up to 400 per year, but it's up to 200 semi-annually, especially since the hotel space is heating up. The other main lever is a bit more defensive, and it's spend multipliers. I don't think they need to do everything else because a lot of people that have Amex cards that only use Amex don't really care. The main risk factor here is competitors, and in this case, I think they do need to offer 8x back on Amex travel bookings in order to stay competitive. But yeah, they want to keep their core audience of high spenders happy and who travel anyways, that way they don't have a reason to switch. Given what competitors have done, I think 8x is the minimum, and then 10x is ideal. Right now, you also earn 5x on flights booked directly. I could see them adding, let's say, 4x for hotels booked directly. But yeah, the benefit of 8x or 10x on portal bookings is that they still make money back on that end, so it kind of works out. Outside of that though, I think they are ahead of their competitors for things like lounges and also even ease of use of credits. But yeah, all of these are predictions and can be very wrong. Again, if you want to learn about cards before these potential changes, we have links on the website, asksebi.com, and also down below in the description box. If you made it to this point, leave a crystal ball emoji in the comments down below, and I'll try to heart it and also respond. 3 questions. Number 1, what do you think the new annual fee is going to be? Number 2, what new partners are they going to add for credits? And number 3, what do you think the breakdown of credits will be? Let me know and everyone else know in the comments down below. Big favorite, thumbs up, share this, but otherwise hope you liked it. See you next time.